Taking down the house. Let's extract as much money as possible from the stock market, like the casino. Winner, winner, chicken dinner. Selling put spreads is like being the house at a casino. In the world of trading, there's a common saying: the house always wins. This phrase comes from the casino industry, where this established the house was has a statistical edge over the players. While individual gamblers may experience wins here and there, the house has the odds in its favor over the long term. Interestingly, selling put spreads and option trading operates in a similar principle. If done correctly, you become the house, positioning yourself to profit more often than not. And let's explore the parallels between selling put spreads and being the house of the casino. And this video is obviously sponsored by Theta Decoded, where you learn all things put selling to make passive income in the stock market. But in this free webinar, we're going to dive into the basics when it comes to put spread selling for the beginners. And this is a very simple process. We're not going to go into any advanced math topics because in the brokerage account, Tastyworks, they do all that for you. So it's important to understand what selling put spreads mean. A put spread is a type of option strategy where you sell a put option and you buy a put option at a lower strike price, both with the same expiration date. The purpose of the strategy is to profit from a strike price staying above a certain level. So, for example, if you're trading Apple and it's currently trading at $300, you could place a put spread. You can sell a put at 200 and then you can buy the put at 180 as an example of what a put spread is. So, when you sell a put spread, you are essentially taking the role of the insurer in exchange for a premium. So once you sell a put spread, you're going to receive a credit. You assume a calculated risk. If the stock price remains above the put strike price, when the option expires worthless, you keep all of the premium that you receive. Similar to a casino collects your earnings when the player loses a bet. So the edge, like the casino, the traders of a put spread has a statistical edge. So the probabilities are in your favor, especially if you put the put spread at one standard deviation of where the current underlying is trading. So in a casino, games like blackjack, roulette, or even slots are designed that the odds favor the house, even if it's slightly. Over many plays, the small edge leads to significant profits. Selling put spreads work similarly, especially when executed with high probability setups. For example, trading at the one standard deviation. So that's going to give you around a 70% probability of profit. So if you want to learn more in depth about this strategy, click the link below the video at thetadecoded.com and you can watch another free webinar, or you can buy the course that's typically on sale for the next 7 days at $24. It's $23.99, and it's going to break down all of the management and risk reduction and go in video PowerPoint style detail of how to execute this and make monthly income. But back to our regular scheduled program. So the casino of the house has a built-in edge due to the rules of the game. As a trader, selling put spreads with a favorable probability gives the trader a statistical edge over time, bringing it back full circle. If you're trading put spreads, you are the house because you have the edge from a statistical standpoint in your favor. And also, it's going to limit risk and give you a consistent return because you just don't want to make money in September. You want to make money in October, November, December, etc. So the casino manages their risks methodically. The house doesn't bet everything in one roll or the dice or one hand of cards. Instead, it collects small, consistent wins over time, ensuring that even occasional losses don't put them out of business. Selling put spreads operate in a similar principle, while the risk is limited to the difference between the strike prices. The reward is consistent, the premium you collect on each trade. Additionally, like the house, you set your limits by choosing which spreads to sell based off your risk tolerance. And that's going to be based off how wide you have the strikes. So you can adjust that based off of your risk preference. So when you trade like the casino, you're going to take down the stock market with small wins that's going to add up over time. So you're going to collect profits on each and every trade. So in the course, we're going to detail more and more on how to do that, what expiration to use, how to manage your profits so you can increase your win ratio and your statistical edge even further than 70%. And then we're going to go over what underlines to trade that's the most liquid. And then obviously I trade with Tasty Trade platform. It was traders made a brokerage based for specifically option trading. You can buy stocks and bonds, and you can trade crypto as well with that. But the course and the overall strategy is based off selling put spreads. So thanks again for watching this informed, interesting video of taking down the casino. And click the link to learn more and enroll in the course now. Trade smart. Thank you.